Hi everyone, thanks for tuning in to another edition of My Two Cents. I'm Avni Raja and here I help you understand all about financial planning and how you can make your money work for you. Now today we are going to talk about life insurance. Now this is a phrase that immediately puts thoughts into our heads that we don't like to think about. I mean, nobody likes to think about what would happen if we died. Nobody likes to imagine how our loved ones would feel if something were to happen to us. But unfortunately, death is inevitable and it's not in our control. But what we can do and what is in our control is to ensure that those who are financially dependent on us are actually taken care of if something were to happen to us. And that is where life insurance really comes in. Now, how does a life insurance policy really work? Now, life insurance works with you paying a small amount that is called as the premium amount every year and purchasing this life insurance policy. During the course of the policy, during the duration of the policy, if something were to happen to you, the money from that policy, the claim amount, would then go to the beneficiaries that you have named in the policy. That is how this entire process works. Now, as far as life insurance policies are concerned, there are a multitude of categories in the market that are available today from insurance companies. So you have everything from term policies to unit-linked insurance plans. You've also got money-back policies, endowment policies, whole life policies. But what experts suggest is opting for a term plan. Now, a term policy is extremely cheap and it is extremely simple to fit into your entire investment and financial planning portfolio. Now, the other factors here that one needs to be careful about and one needs to be aware about and while purchasing a life insurance policy, I want to actually take you through some of those important points. Now, first of all, you always need to check how good the insurance company itself is. So do a little bit of a background check on the insurance company that you want to opt for. The second point is you need to check the claim settlement ratio of the insurance company. Now you want to be sure that if something were to happen to you, that your family is able to go and those who you have put as the beneficiaries are able to go and collect the money that is due to them very simply. So that is what the claim settlement ratio of that insurance company will tell you. The third point is that you don't always need to opt for the cheapest policy. That shouldn't be the only determining factor when you're opting for an insurance policy. So you always should ideally compare various policies and then take a call as to which one you want to opt for. And now this is also an extremely important point. You should avoid combining your investments and your insurance. Keep them separate, and that is what a term policy actually does. It is a pure life insurance policy and nothing else. And that is how it should be. Your investments into other avenues, other mutual funds, or whatever else you're putting your money in should be kept completely separate. So it's ideal that you don't opt for plans which combine insurance and investments. That is another extremely crucial factor to consider. Now, the other point is how much life insurance policy how much of a life cover do you actually need? Now, there are various thumb rules, there are various calculations that experts suggest one should opt for. Now, one thumb rule that one can look at is that it should be at least 20 to 25 times of your yearly income that your life cover should be. The other route is that there is also another method of calculation that you should look at how many years away you are from retirement and based on that determine how much insurance you actually need. So if you're 18 to 35 years, you should look at a 25 times your annual income kind of a cover. If you're 36 to 45 years, you could look at a 20 times your annual income cover and that way go on as you are older. So it essentially depends on what your income is. It depends on what your expenses are. And also remember, you have to take into account inflation as well. So going ahead, if you're taking a 10-year or a 20-year kind of a policy, all of those factors also need to come into place as well. So essentially, this is what life insurance is all about.